Good morning. You're watching the Financial News Network. I'm Chuck Pierce. Taking a look at the many segments throughout the markets, one that has its hands in everything is logistics. The logistics sector holds big-name companies such as FedEx and UPS who work with all different kinds of sectors, handling goods and products and organizing how they are shipped to home and big-box retailers. With me today to give us a different perspective to the business of the sector is CEO of Echo Global Logistics, Doug Waggoner. Thanks for being with us, Doug.
Thank you, Chuck.
All right, and now first, it seems that your business is different from businesses like UPS and FedEx. So what does Echo Global Logistics actually do?
Well, we're different in that we're a non-asset transportation provider. We don't own trucks or ships or planes or trains. Instead, we use technology to manage our clients' shipments. And we procure transportation capacity from a very, very large and fragmented industry that contains hundreds of thousands of players. And so by using technology, we can efficiently procure transportation capacity, essentially move our clients' shipments for them without actually owning trucks.
Okay, and so looking at margins, why is this better for the company to not own your own fleet and just focus on like the organization of it?
Well, in our case, it's a very, very large space. We have a very strong sales organization. If you look at transportation and logistics, it's about 10% of GDP. So it's a very, very large space, 1.3 or 4 trillion dollars. So there's a lot of opportunity to grow and take market share. When you operate an asset-based fleet, you have to be concerned with managing the balance of the fleet and the drivers, making sure that you have equipment where you need it. And so Echo takes a different approach. We basically have a very large digital Rolodex where we store all the capabilities and aspects of our transportation partners who are our carriers. And we're able to match the right provider or carrier with the right shipment in every single case. So it's a more efficient way to go to the market and in this very fragmented space find the right price for the right truck.
Okay. And who are your main customers? Do you mostly deal with big box retailers or do you have small businesses as well that you deal with?
We actually tend to cater more to small and mid-sized companies that do a lot of outbound shipping. So we're not real big in the consumer space or the retail space, although we do ship to a lot of stores, such as the big box retailers. Our customers tend to be the suppliers to those stores. So we're a great solution for a middle market company that perhaps doesn't have a transportation and logistics department. Perhaps they don't have much technology in the way of transportation management. So we supply the transportation execution as well as the technology and the visibility, and we can source that transportation from tens of thousands of carriers that we partner with.
And so I guess kind of going more into the specifics of who your customers are, what sort of segments do you cover? Is it all segments like electronics, retail and
Well, we're heavy in manufacturing and industrial and construction materials. Anything that's manufactured or built in the United States certainly has to be transported to either a customer or a distribution facility or potentially for further rework. But we also do a lot of business at the ports. Freight coming in from overseas, manufactured in the Pacific Rim, for instance, coming here for retail. So if you think about it, we really touch every industry and every segment of the economy, but we're probably more heavy in industrial and manufacturing.
And who you're seeing that's having the most growth? Like what segment that you're one of your customers you're seeing the most growth of?
Well, I would say that in this recovery that we've seen up until now, it's been led more by U.S. manufacturing and sort of the industrial sector, and maybe a little less robust on the consumer side in terms of things like consumer electronics and big box retail.
All right, and now looking at earnings, I know your third quarter earnings are coming up next month, but back in July you said the company was poised for double-digit growth for the third quarter. Do you still have this outlook for your upcoming earnings?
Yes, we reported during our second quarter earnings call that to date in the quarter, we were tracking at about a 36% growth rate over last year. Of course, I can't really update that now until we have our earnings call, but I would tell you that looking at the transportation economy, as I call it, it's felt like it's a lot better than what you hear on the financial news programs. And those are heavily, I think, swayed by what's going on in Europe and the banking system. But in the freight economy, we talked to lots of trucking companies and carriers. We talked to lots of shippers, and so not just on behalf of Echo, but really everybody that I talk to seems to think the economy feels better than what you're reading about in the paper. And I wouldn't characterize it as robust. Now, Echo's had market share growth, and so we tend to grow at a significantly higher rate than the rest of the industry. But speaking for the industry as a whole, I think all of the transportation providers would agree with me that it's not as bad as what we're hearing about on the news.
Okay. And what did you focus on this past quarter to achieve that goal of double-digit growth?
Well, we really focus on execution across three dimensions. First of all, we're very proud of our sales execution. We continuously add new customers. It's our goal to add over 1,000 new customers every month, and it's also our goal to sign between 5 and 10 larger contract deals every quarter. So that's something that we always focus on, and we've been very consistent at delivering that result. Beyond that, we focus on operational execution. Every shipment for us represents a transaction that's important to our customer, which means picking up a shipment, moving it, and delivering it to their customer in good condition. So we always focus on operational execution, making sure that we're giving good service and good transit times with damage-free operations. And then finally, our technology execution. We're a company that prides itself on being a technology company. We think it's a differentiator for us, and it's what allows us to be a virtual transportation provider without any transportation assets. And by using technology, we can procure capacity efficiently in the marketplace. We can find good opportunities, good prices for trucks. We can leverage our buying scale and get good prices for our customers and still make some money for Echo. So we just really focus on execution. Our business at the end of the day isn't real sexy, but if we execute well, we'll get good financial results and we'll provide good service for our customers.
And I see that your stock has been recently off its highs from this past summer, but you still posted solid earnings results for the second quarter and are looking to do it again this coming month. But the first question is, what do you think has caused this slight decline? And secondly, is it more something specifically with your company, or is it the economy on a macro level?
Well, our stock hit an all-time high just prior to our last earnings call, and then we had what I think everybody agreed was a good earnings call. Our stock hit a high right after our investor day, so I think investors that came to our presentation liked what they heard. We had a good earnings call, and there's really been no news since that time. So when I look at our stock price, I have to attribute it to the overall macro economy. A lot of institutional investors play the transportation sector on a cyclical basis, and so they're in and out of transports depending on their thesis on the macro economy. And then finally, as a small cap company that's relatively new in the public markets, I think we have a little more volatility in our stock than some of the bigger, more established companies. But we think it's undervalued. We think we're doing everything that we said we would do, and we're delivering great results.
And lastly, what is next for your company? Do you see consolidation somewhere in the logistics space, and are you actively looking for new acquisitions at all?
Well, we've conducted an ongoing M&A strategy that's resulted in 10 acquisitions, or 11 acquisitions, I'm sorry. And we continue to look at opportunities to grow through acquisition as well as organically. And so we continuously work on that, and we have a pipeline of opportunities. We've got great organic growth, but acquisitions make sense to us where we can fill in geographical gaps transportation mode expertise that helps us with our clients. So that continues to be part of our strategy. And we expect to continue to have double-digit growth for the next 4 or 5 years to come, and that's going to position us well in the space.
All right. Well, thank you for being with us today, Doug, and I wish Echo Global all the best in the future.
All right. Thanks a lot.
All right. Thanks. For more interviews, headlines, and analysis of the markets, keep it right here to the Financial News Network. I'm Chuck Pierce.